The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock until noon at 877-927-6648. And we're looking at a very interesting situation right now. Dow's at 17,958, up 20. S&P's up 1 at 2113. The comp index at this particular moment is up, it's down 3 at 4958. Been struggling. Let's go to the gold. Gold is up 15 at 1260. We've been talking positively about it since we switched from long dollar to long gold. And I think the gold contract is telling us that it's found a base and that it could chop around, but it has made a very important low, the low that was made in that whole December-January period. Let's go on. Let's look at the IWM right now. IWM, this is leg F/B with the technicals very strong. So I would, I'm not inclined right now to go short any of the indices, not yet. There's certain things I'm going to be waiting for. I think we're really close by Friday, maybe even Monday. I think we might be there. So let's go on. Look at the QQQ. Look how the Qs are suffering here. Made a peak C. It just can't get above. Going into the 111s, it's 110.08, holding okay, but not. It should be leading and has hit that downtrend line in the weekly chart. Let me move this away here. Actually, no, before I move it away, I always forget about this. I do it way before the show. As I lead in, people see my 10-minute chart. What I'd done was we were over here, and we were over here just before the 11 o'clock hour, and I had drawn in the Chapman Wave Volatility Index notations on the 10-minute chart. And the VIX was at about 1387, 1390, maybe 1397. And I circled in this area and said D with a question mark. We've just gotten to that D. Let me show you something else. ESM 16. That was an Eiffel Tower. You know what? I talk about that uppercase A. There was a left side, right side price time match. Try to get to the high. Actually, I extended it. I didn't have to, but it went there early. And what's very important, there was an instant restart in the 10-minute E-mini, still June. And you went to an A, B, C, E/A, F/B, G/C. Those who know the Chapman Wave methodology know what I'm talking about. That had resulted in a D spiking above the 218 round number high of yesterday. And now we're looking at 2118.75 as a new high and kaplop. What I've been discussing for a couple of days was I was anticipating that Monday afternoon into Tuesday, we should see weakness in the afternoon, which is what we saw. I'd called for a plus 20 to a minus 20 Dow close yesterday. And in fact, we got a plus, 19 or something like that. And then I was anticipating that it'd be a weak Tuesday. But with the election becoming a little bit clearer, the election possibilities becoming clearer, I think that's why the market responded with a little bit of a bounce this morning. Now I think that bounce is over just for the short term. I suspect we got weakness into tomorrow. Some of the indices did not make new recovery highs. As I showed you, the QQQ didn't. Did the SPY? Go to the right place. Did the SPY, SPY? Oh, I haven't finished the 10-minute chart. Yes, it did. We went to a leg E. The diamonds, or the Dow, let's go to the Dow, INDU, went to a leg D this morning, but way underneath the previous peak D. So a lot of this is very important as we speak at this particular moment. And what we're looking at here is that when we go to the gold, this is leg C. I believe there should be a leg D, but I still think we're in a trading band for gold. And in fact, I'm now going to get rid of the rectangle formation because it's becoming clearer. I think we've got a Chapman wave stalk leg formation right there. It's a little bit expanded, not an oval. I like the oval. This is more like a circle, but that's okay. Means we can still chop around for a little bit longer. But it's very important that it did that. Now let me just jump over to the E-mini because I wanted to show the 120-minute chart. Reason why I thought that there could be a pullback today is that we made a peak E in the 120-minute chart. Let me just expand this a little bit. This is this one right here. I'll expand it there. So it goes from 2082.75, was it 10 o'clock? The close on the 3rd. Starts this beautiful move, peak A, peak B, peak C. There's an uptrend, a resistance line. It's like a target line, and then it becomes a channel line. And we go to a D and an E, and then E is at 2118.00, round number, high, at 2 o'clock on the 7th. Then the market pulls back, and that was overnight. It started to creep up a little bit, and we went gray A, and that B should have been over there. And I give it an alternate count of F because the MACD is turning down, deflecting lower, and the stochastic's down at 64%. So I suspect that we're done now for the moment. There needs to be a bit of a breather. Then I think there'll be one more pop-up into the Friday timeframe is kind of what I'm thinking, or maybe Monday. And at that point, there's a chance we start to get a deeper pullback, but it's still only a pullback as far as I can see, because I believe that we're in the phase now that should try as much as you can to move higher. Quick question I got while I'm talking about this. What's a good entry point for gold if you aren't in it? I'd say it's at 1263 right now. 1256 is the 9-period exponential moving average in the 120-minute chart, but it is a B. Oh, it's only a B, so that's good. I must double check. These things can be a little tricky. 610, okay, parallel. So this, I'm going to call this a B for now. Could be an alternate count, but everything about it is MACD stochastic says should go higher. If there's just a sudden pullback to the 1258 to 1254 area, I think you can go into gold, but you need to give it 2.5 to 3 points of a leeway. And the moment you start to get a 2-point profit, I'd be real careful. I'd try to make that stop maybe 1 point below your entry price. And if it goes 5 points above your entry price, you can make your stop your entry price. Because what should happen is that this is leg C. There should be a daily pullback, an entire day, and then leg D. But this C hasn't stopped yet, so C can keep going. So I'm suspecting that we're in the process now. So that's if you want to be a little bit conservative. If you want to be a little more aggressive, take a much smaller proportion of your entry point that you would have if it did pull back at 1256, and you can get in right now and then put in a little extra, so a smaller amount now, and you can add to that on a pullback to 1256. Why? Because if this move starts to increase suddenly, we could see this candle right here, the candle of the 18th of 1285, we could get there quite quickly. So as we're about to wrap up, let me just say TLT, that's bonds, the 20-year Lehman T-bond fund, acting very well. It's at 133.10, up 54 cents. And I'm missing the dollar DXY. The dollar is very weak, very weak. Peak E at the top, and now we're pulling back. I'll be right back. Basil Chapman, Tiger Technicians Hour. Be right back. Dow's up 29.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and there are a couple of things that I just want to look at here before I lose my train of thought here. In those 10-minute charts, I really did want to look at the USO, which is the United States Oil Fund. One of the things that I always do when I see this, I didn't really have time because I was busy preparing to set up with the setup for my show, and I just did this very quickly, is that whenever I see a long-legged doji, I grab the top and I grab the bottom, and I draw in a rectangle. Now, if you don't have this, trade station is really fantastic when it comes to tools, technical tools. But if you don't have that, it doesn't matter because you could just draw a straight line or you could just do it visually. You can look at the numbers. And what it said is, in this particular bar, very often, within a quick move, there's a spike outside one of the parameters, either the high of 1244 on that bar of the 20 to 10 or the low at 1231. And my rule of thumb is that within two bars, if you take out one of those levels, one of the high or the low, and then close above it, there should be one touch of the candle of the wick. And then in this case, it'd be the entry price of 1238 and the closing price of 1238 right there. Let me expand that so you can see what I'm talking about. So if we went above that, you'd have a touch of it, and then it should continue in the upside direction. If it closes below the wick of this candle itself, this candle, the second candle, if it closes below the price itself, after touching outside and going above it, or touching below and going closing below it, that says that there's a good chance now they're just going to be stuck back in the range. So what this has done is made a decided effort to break on a close, the third bar, closed underneath the low of 1231. It closed, it went to 1227 and closed at 1229. And it says, okay, you can have a little bit of a climb to the upside, but you've got to be careful now because the weight of the breakdown says that 1227 area could very well be tested. The only way it's going to change that kind of action would be a decisive close, once again above 1231, that little doji candle right there, the open and closing. Okay, so this is kind of bearish now for the USO. Just short term, I'm only talking 10-minute chart, right? So I wanted to go through that, and just real quickly, I'm going to go to the callers right now, but I did have a question about, why do I keep losing it? Was it RB? BZQ. I think it's BZQ 160. I think that was Julie. Yes. Julie wants to know where we are. This is alternate count F/C. Still strong in the crude oil, but it's getting a little bit toppy. I would give it just another couple of days before crude oil starts to digest the big gains, has a bit of a breather, and that should coincide with the market breather. Look at the weekly chart for BZQ, which is Brent crude oil, last day, August the 2nd. Hope that helps you. And Julia, now I'm going to go to Scott in Safety Harbor. Scott, I haven't heard from you in a little while. How are you?
Yes, everything has just been wonderful, and to me it was a blessing that we took that dip in the market, because I decided just to, what I call, keep everything, just keep it in the oven. I had X in the
just
oven, and
lay low. That's good.
And I was in X at like 17. I got out of that today, but it's just, and I'm sure you do as well, when it's possible to just. And we've talked about this so many times. You've got to be able to think clearly and be high performance. You can't drive that race car every day. You gotta shut it down and quiet it down and get some maintenance and think about what you're doing.
That's what they call recharging. You have to do it. I agree. Yes.
Because when people just, and you've seen it in life in other ways, and it's an old saying, but when you can work too hard, you can just go nonstop, and then you kind of lose your mind. You need to step back once in a while.
No, it's absolutely true. What are you looking at right now?
I am looking at and just curious about what you've got to say about it. I've cashed out of everything today. AAX and POT came to light.
Right.
And I got a big beating from a lot of people, verbal beating from people that I know and relatives and stuff, because I was a big proponent of X at the 1650, 70, and then, then it pulled. Well, you said, and I have resigned myself, as you have told me before, when people ask you about stocks and so forth, just say, don't give them anything.
Well, it's not a matter of giving them something. Sure, you can, and I think it's important to be able to more or less discuss it, but to actually give them something that's, if you aren't able to follow up on it,
well, see,
then that's very difficult, because you could say, buy it, but you're already out, and they're still in it, and it goes down.
Right,
so I'm just going to say that
they get greedy.
And it's not, in a sense, you're right. Yeah, people do get greedy. We all want to see a little bit more. But the issue really is not greed. The issue is follow up, because there has to be an action. Now, if you said to someone, hey, I'm going to buy potash, I'm going to buy it in the 17s, but believe me, if it gets to $18.30, I am out. That's a very clear thing. There's nothing wrong with that.
But you know what happens, Basil? Even on days like today, I just got off the phone with someone that said this, and I couldn't believe it. He said, X went up $1.50. It's got a lot of momentum. I said, hold on right there. So now you're going to think, what, 2, 3 up? Yeah.
Right.
I'm like, stop yourself right.
Right. So, okay, I agree. So, okay, well, the question here is, what I did in my webinar over the last Thursday night, I did a special webinar. I discussed the steel stocks. I discussed the a number of different areas. I discussed the gold area, that how it's starting to improve so much on this pullback. So I think what we're looking at here is a rotation, and I discussed the agricultures as well, a rotation into areas, because fund managers are really at a loss as to what to do. And my thinking is that for instance, the IBB, they kept grabbing it. But if you look at the chart for the IBB, which is this is the iShares Nasdaq Biotech ETF, the pattern that I discussed with you, that pattern of the arch that can go to an H, lowercase h, and then goes to an M pattern. Right. My thinking is that this is stuck in a range, and it's not the area to be in. Whereas if you're looking at something like a potash, you say, hey, that's a completely different area. But wait a minute, you look at the chart and you say, no, wait a minute. It's got the same H pattern that can go to an M. That's the reason why I said to you, your concept of getting in and getting out that's exactly the kind of market we're looking at in certain sectors. So I commend you for getting in and then getting out and saying, hey,
and I
I'm
know
out.
nothing about investing. I mean, you've talked to me 100 times. I have no idea about what you're going to be doing in 10 or 20 years or 2 years. I'm a day trader. This is about making quick trades and getting out.
Right. So you know what? I think you've taught a lot of people with your techniques and with your calls and with your saying that I'm in. Should I get out
But
or should
where
should I get in?
Teach them, Basil? Greed. And I point out, like, we have a big casino here in Tampa. Don't you get it every time they put a new wing on that place and make a new pool or something?
There's a reason for it.
But people look at it as a sign of prosperity there. Yeah, that you gave that to them.
That's it. That's
Your
the winnings.
demise
That's the
is
winnings.
their prosperity.
So, okay, good. I'm pleased you're out. I'm pleased you're still taking your profits. Good call. Thank you so much,
Yeah,
Scott.
it's good to hear from you. Bye-bye.
Good. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I got a nice email here saying the TNX, lowest term premium since 1962. And could I please look at WFT, Weatherford, and OIH? Sure, I will. In fact, I was going to go to that area because I hadn't spoken about crude oil other than that USO chart of the 10 minutes. Now let's look at this. So I'm going to go to crude oil, and you'll see that crude oil, I've got that down arrow, which is an F, which is correct because the stochastic broke down below 80%, or was declining, went below 80%, and the MACD did turn down, but it sort of flattened out. So the alternate count I'm going to go with here is G/C, just so that it doesn't get confusing. I'm going to take away the down arrow, although technically in the Chapman wave, that's fine, because what would happen is I'd put an inverted V-shaped pattern right here if there was a breakdown. But my thinking is that this is, I've seen so many of them, I have to include it here, that this Chapman wave inside right there, that instant restart is really an ABC. That's why I got the C. So I'm looking at this and I think maybe tomorrow we pull back in oil and the next move up starts us going towards some kind of a top as we break away from the 9-period moving average at 49.60. We're at 50.88 and at 48.27. So my thinking here is that we're in leg D, very strong weekly chart on the technicals, but I always get a little concerned when I go very quickly from a B to a C to a D. And that's the case right here. So I'm just looking at this and I'm saying, I don't have a signal. I'm not even sure I'd even want to short. I'd be wanting to buy crude oil, but only on certain conditions based on the weekly chart. But there's a good chance that the 48s to the 47s within the next 8 to 9 trading days, that's a possibility that we could get there. So let's look at what was it, Weatherford, which is Weatherford. Let me just see. Read it again. WFT. So WFT, I haven't done this for a long time. I used to have all of these, Weatherford, every one of them rigged, a whole bunch. A, B, C, D, makes a peak D in the monthly chart back in 2014, December, January, going to 2015, and plunges from the 25 area down to the just under 5, trading right now at 658. So the question is has this got further to go? Based on the H pattern that gets repeated, it's done it twice now. My thinking is that this is the start of a move, but there's a good chance that there might be a little backing and filling before it breaks into the 8.75 to the 9 area. So let's just go one step at a time. What would take it there? A couple of things. The work that it did on the left side, since the low was made back in January the 20th, peak A, B, C, D starts again. A, B, C, D, E. And that says that we're right now in leg B, and it has a consistent way of going to a C and a D. So yes, to GT, I'm going to say this. If you're interested at $6.59, and I'm going to put this in my notebook here, just let me, WFT, I'd like to do a little more work on it. I think that there's a chance that Weatherford International PLC has a chance to, if it can hold 616, the 9-period moving average, without even touching it in the next 3 sessions, but instead it just pushes up a little bit more to $7.10, 708, 710, 711, somewhere in that area, to try to fill that gap a little bit more. That's going to be really important. So at this particular point, my answer is, if you're in Weatherford, I would stay in Weatherford. I put a stop at $6. It's about, 60 cents down to 10% risk, only if it's a small position. On a part of that position, I'd have a stop. No, I'd look at 620, because if it touches 620, that's where I actually would like to buy for a spike to the leg C if it's going to pull back. But if it starts to go to C above 695, in other words, I'll be real clear. If WFT, Weatherford, trading down 11 cents at 660, is able to break to the 696 area, I would immediately, if you're not going to be nibbling on any pullback here, that's where I would start a position. But it has to be a smallish position. I would definitely start there. Why? Because the leg C should be quite strong, and it should fill the gap. We should even try to get to the top of the gap of 735. So that's the way I would do it. But I don't want to get too carried away, because the weekly chart is still only it's already trying to form a base. And the monthly chart is just beginning another inside month. It doesn't mean a thing. You really have to go from the daily, which must get to the 730s, 740s, and it needs to do it by a week from Friday. So in other words, about eight trading sessions. That's what you want to see. All right, I hope that helped you. Next question was, did I actually finish that? Yes, I did. So FCX, which is Freeport McMoran, This is the same sort of thing. It's just stuck. I don't see anything here. I'll be wrong if it suddenly picks up and it goes from $11.69 FCX up 46 cents today. I think it's just chopping around. It could even bounce a little bit. It needs to be at 12.40. If it gets to 12.40, I'll become interested in it. That's 50 cents. No, 30. That's 70 cents higher. So a lot has to happen. And all I can say is there is a chance that this cluster formation creates a spring, and that spring just powers the thing up again. So if you are interested in Freeport McMoran and you want to do something, I'm going to say it's in the copper area, and copper has not been doing very well at HG. You see, yeah, it's just copper's not doing well. JJC is the copper ETF, ETN, IPATH, Bloomberg. I'm just going to say to you, it might be like gold. The gold stocks are doing better than gold contract in many cases, but I'm just going to say that FCX has been. There just seems to be a lot of overhead supply, and it can't hold its gains. But there's a lot of support, so it's just stuck. I'll tell you what I would do if FCX gets to $10.60 in the 1060s. I'd nibble, and I'd try to have a trade that goes up to the 1170s, 1180s. If this thing fails at 1173, it can't break above 1204, the high of the 26. It could come right back down and just being stuck in this trading range with a fabulous up and down move, but not going anywhere. Hope that answers the question. Goldman Sachs. Goldman Sachs, oh man, it looks the same as the chart we just looked at. I don't see anything in Goldman. Goldman is not a leader, and my suspicion is that when Goldman at 154.82 right now, down 35 cents, actually breaks into the 165, 167 area, Goldman is going to lead this market higher. That's the way I'd be looking at it. But at this particular point, it's not doing anything. Another question is X. Well, I just did X. X is looking great. Oh, I'm so upset. I spoke about it on Thursday night. Friday, we just missed our entry points on one of the stocks in the steels, and it just took off, and it's still taking off to this. Today, it's still taking off, and X is the same thing. I just missed. Dumb. I should have just jumped in and said, hey, it's going higher. So my error, and it looks very good. Yeah, and that's telling me that's the reason why I think, let's look at GM. GM, ugh. No, it's not a reason to look at GM. Let's look at Ford. All right, that's pulling back a little bit. All I can say is that this is one weird situation. The SLX, which is the steel ETF, ETF, is doing very nicely. And that should be saying something about the economy. Dow's up 51, S&P's up 4.5. Basil Chapman, I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So a couple of things that I'm looking at here, and I just want you to do this because we're going to go to our next caller. Right here. In the VIX index, remember I said peak D? What do we look for in the Chapman wave? We always look for Ds. That's where you can get quite a bit of a pullback. Well, we went to 1427 in the 10-minute VIX index, and now we're trading at 14. So that's a peak D, and it's testing the key support level of 1395 in the 9-period moving average. But this bounce back in the market after pulling back, that's a sign of strength. So let's go to George in New York. George, how are you?
Basil, good morning. How are you today?
I'm very well, thank you.
Good. Basil, today I wanted to look at the Dow Jones transports on the weekly chart.
Okay, IYT, there it is, and they are rallying, getting to some intermediate term resistance that needs to be broken. It's at 142.34. I'm looking at the iShares Dow Jones Transportation Average Index Fund, which tracks exactly like the Dow transports themselves. So it's in leg C in the daily, but peak C in the weekly, making a cup formation. The MACD is the one sign here that says there's still some residual strength. The stochastic is not looking all that good. So fire away. You've got some statements, I'm sure.
Just my question is this. On the weekly chart, is it safe to say, of course we need to cross the neckline, but that this could be an inverse head and shoulders finishing?
You know, I've looked at that. Now, I actually had a chuckle because I was listening. I don't know who. There was someone I was listening to on TV. Maybe it was Kramer quite a few weeks ago, and he's got very deeply now into the technicals. He's starting to talk about the MACD and the stochastic and all that stuff that I've been talking about for about 20, 30 years or something. But what's interesting is that I remember, I'm almost sure it was him, and he said, there's a head and shoulders pattern, but of course, at some point, almost everything looks like a head and shoulders.
Right.
And he's right, but there's a very specific head and shoulders. There is part A and a part B to it. Part A is that some people love a declining head and shoulders. I'm not sure, I can't remember what the reasoning is. In other words, it makes a higher high and then a lower low, so that it looks just like a head and shoulders, except that the person's being blown by the wind, so they're at an angle.
Okay.
So that everything you're looking at is exactly right, except you don't get, say, 121 on the left for the left shoulder, 114 for the head, and 128-ish for the other. You get something different. And the bounce that occurred on the way down also has lower highs. So that's part A. Part B, actually I should say that's part B. Part A is just the regular one that we see. I talked about that in many cases. I'll show you a very good example of it. I'll show you a very good example of it that worked and then didn't break the neckline seriously. Here's the Head and Shoulders in the 120-minute chart Dow, and it made this in April. It made that peak and then it pulled back. Then it created something like a neckline at the 17,400 level, spiked up to the head of 18, I think 167. Yep. And then it pulled back, and then it did the same thing with the shoulder. And then what happened is it tested the neckline. It actually broke the neckline. It went to 17,331. And then it started this big rally up to leg E, which is what we're at now in the 120-minute chart. So these patterns are identifiable, but they're on the most, to me, they're the most, like the cup and handle, they're probably the most unreliable ones, only for one reason. The reason is that by the time you get to them and recognize them, it's very often too late because all other things have happened. And then the disastrous collapse that says you're going to go one-to-one from the top of the head to the neckline to the downside just doesn't occur. It didn't occur here. It didn't occur. It hasn't yet even occurred in the IYT. So now let me go back and say, yes, you're right in identifying it as some type of a Head and Shoulders. Let me do this for I'm just afraid I'm going to leave it here. So here's the H for here's the S for the shoulder on the left side. I'll call it LS. LS. Here's the H for the head right there at the bottom of 114.94 on the 22nd of the week of the 22nd of January. And then it goes up. And this pullback here could be considered a right shoulder. And it's higher than the previous one. And the peak that it started coming down from is lower. So in essence, what I prefer to say is if you look at it, the more reliable one is what I call the Chapman wave falling axe. If you look at it in this regard here with the declining trend lines and then the sharp declining lows that went from the low of on the 12th of the week of the 19th of December, the high of 162, the low of 154, and then it made the low of 128.26 in August, and then 114.94, the low of January the 20th. That line is really important. And all I can say is that if the transport, and I might be answering your question, because if the transports at 142 break about 10 points to the upside, that's not even 10%, it's like 8%, which shouldn't be a big deal for the transports because they move more than 8%, certainly to the downside periodically. Right. That shouldn't be a big deal because the moment it crosses 146.07, you've started your leg D in the weekly chart, and then you've got to punch through these barriers of the Chapman wave inside track resistance zone. So that's why I'm saying at 152, not only do we have a really bullish breakout, but the monthly chart is going to be really good. And then you can say, hey, that was a beautiful Head and Shoulders, inverse Head and Shoulders pattern. But you see what I'm saying? Because
I do.
If it gets stuck, it can get stuck here matching that pattern for another 3 weeks.
Would you say also a Head and Shoulders would work better, of course, at a bottom rather than something like this also, no? I'm asking the question correctly.
Yeah. Let's see. Let me put it this way. If it is a Head and Shoulders at a bottom and it works, it should be a powerful move to the upside.
Once it breaks the neckline.
Once it breaks the neckline to the upside. I'm just seeing if I do remember one from the bottom. There it is. Okay, so that's one, but it wasn't the bottom. Yeah. Now I'm looking at, this is the declining one, that part B that I was looking at. If you look at it's almost, actually it looks very much the same. If you look at the low of November, the week of November the 21st, 2008, at 52.54, there were a couple of pop-ups. It went to peak A, peak B, and then it failed and it broke the left side H pattern low of 63.66, and it went all the way down to the low that was the 2009 low, 38.28. And then it rallied and had a couple of failures, but it basically, right at the level of 52.54, it went to 53.41, and then 53.50. So you got that same sort of thing. I'm going to put it in here to say, when it works, a left side shoulder, head. When it works, not only can it be spectacular, but it can be the start of a pretty major move to the upside. But in essence, what we're really looking at, actually, if you can hold on, what I want you to show you, what I think is most important. Hold on a bit, and I'm going to show you something very interesting. Okay, George?
Thanks.
Okay, folks, the Dow's up 54. We're talking head and shoulders patterns. This is the March low in the IYT, the transportation index, but there were other things that were even more important. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So we're back, and we're with George in New York, and there's a couple of funny things happening during the break. Lots and lots of things happening because of the den, and just I answer questions, I look at charts, etc. And then someone said Procter & Gamble, Head and Shoulders. I'm busy looking here. That was Borer in the den. No, it said Head and Shoulders patterns. And then Peak said Procter & Gamble, P&G. And I'm busy looking, and absolutely, P&G made a fantastic one at the low that was made on the 12th of June, and then it pulled back even deeper at 65.02 on the August the 24th, and then it ran up and then came back and retested a low, and then it broke out. And then I looked at the top, and it did, but then I suddenly realized I'm so busy getting involved in the technical details that I missed the joke. Procter & Gamble makes Head and Shoulders. It's the shampoo. So let's just go back to what you were looking at. IYT, Yes. So I was talking to you about that low that was made back in 2009. But what's most important about that low, let me just check if that's not the one. There it is that if you look at it, the MACD and the stochastic started to build fabulously. And as it was building, the stochastic started to hold a lot over the 80% level. At each one of those peaks, it kept going and holding steadily. And then the 200 period moving average, from which it broke down back in October, the week of the 3rd of October of 2008, suddenly became an attractor. So that's what I wanted to say. That becomes a magnet, and it hung around there for a while before it broke upside. So now let's go to the pattern that we're looking at now. Does it have the same characteristic? The stochastic has actually, what I said earlier is that the stochastic on the weekly has dropped a little bit too much for my liking, but the price is the arbiter of the trend, and so far it's holding well. So what I'm going to say to you is, if the IYT, that is the iShares Transportation Average ETF, holds well, if it doesn't take out 137, just 5 points low, if it goes under 137, I'm looking for a retest of the 131 area. But in the next, between now, Wednesday, and next Wednesday,
right,
if it doesn't break 138, just holds steady as a rock between 139 and 138, and it keeps jabbing a little higher, then there's a really good chance. Yes.
Just let me tell you, I'm looking at the Dow Jones Transports themselves on a weekly chart, not the IYT.
Okay,
so,
now.
Why I'm saying that to you is this. They're both setting up what appears to be an inverse head and shoulders. But
correct.
I'm looking at my volume on the Dow Jones Transports on the weekly. And what I see here is on the first trough, what I would consider a trough, and of course it's a whipsaw, is the week of August 24th, 2015.
Correct.
We have high volume.
Huge volume.
Go down to the theoretically head.
Right.
The week of January 18, 2016, and I'm still showing high volume on the head. As we go to the right side, forming on the week of May 16, 2016.
Correct, yep.
Showing volume decreasing. Now, usually on a traditional head and shoulders bottom, if I learned it correctly, once we hit the third trough or the right shoulder, then our volume starts to dissipate. And then what we see
wait, George, that's if it's at the top, though, isn't it? At the top, you want to see less volume on the right shoulder because that's showing that there's not internal buying. On this one,
same way on the inverse as well?
No, on the inverse, you want to see much heavier buying. That's if you use volume. No, you need. I believe.
Well, I'm thinking if it breaks the neckline, then we use volume.
Okay. Hey, I'll talk a little bit more about it tomorrow. Thanks so much for calling, and we'll be back tomorrow, folks. Have a great day. Stay tuned for your swimming lessons and all the rest of the show. Be back tomorrow, and I didn't answer some questions. I'll do that tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.